We had a terrible first half. We are concentrating on cost containment. The members of the trade union are here with us, trade unions are here with us, and we are speaking to them, we are engaging them. It's going to be, the outcome will be a joint agreed outcome between the parties. I'm not at liberty to say what the impact will be on labor numbers at this stage. We're targeting the end of this year to come with a finalization of the process that you are busy with. It is important to look at the cost aspect. When the market is like this, it is the low-cost producers that will survive, or at least that will go belly up last. We're going to see further supply cuts in the industry, and particularly from UG2 operations that have become uneconomical. There are some operations that have been mothballed a little bit quietly, not enough in the industry, in order to bring the supply and demand back in balance. But there have been speculation that some other operations might be closed. Two major contributors to the basket price have been gone down, and people have been ignoring that, looking at palladium and platinum, is rhodium price, which really dropped, tanked big time, which affected the basket price. But also nickel, which is one of our major contributors to revenue, having dropped from about $22,000 last year this time to around about 14,000 now, which affected the basket price quite exponentially. The current anemic rhodium prices render much of the UG2 sub-economical. And that is the issue we will be seeing, and will be, during our concluding slide, we will talking about the forecast going forward. We do expect some of the mines, production coming out of the market, being removed from the market, because UG2 particularly has become uneconomical. But also the reduction of rhodium loadings over the last few years seem to be reversible, and therefore keeping rhodium prices depressed for longer. So we've got to see production of rhodium, and therefore UG2 being reduced in order to get the market in balance at that time. But long term, there is unanimity in the fact that we will be seeing rhodium prices picking up quite exponentially once the stockpiles have been depleted. We are tightening the belt and fighting costs with everything we possibly can. Europe is a sick continent if you consider the fact that the bulk of platinum consumption that goes into auto catalysts is consumed in Europe, and the impact of the depressed economic climate in Europe has been quite hard on us. The issue is the sentiment in Europe that's affecting the prices. But if you look at the volumes themselves, the gross platinum demand for 2012 is forecast to be slightly marginally higher than 2011 at 7.6 million ounces. It is the automotive sector that's affecting sentiments, that affecting the price. Net platinum demand is expected to reach 8.3 million ounces in 2015, which is a 10% increase from the 2007 levels. You remember they were quite high levels. So there is hope at the end of the tunnels, but we need to see the sentiments. We need to see Europe recovering from its recession. Particularly, we need to see the political leadership strengthening in Europe. This is not a dead industry, it is a troubled industry. Those who are developing mines, those who are developing shafts and increasing production should benefit when the market picks up in 2-3 years' time. And I think we are one of them with our Styldrift project.